Tesla stock is up about 1.5% at the time of recording this video. We will be going over all of your Tesla stock breaking news today that you need to know. But first, I actually want to start with this. I have the 20-day moving average plotted here on the chart. It's this yellow line. If you guys do this on your charts, I hope you do, because the 20-day moving average is seen as a widely known and widely respected moving average by technicians on Wall Street as a trend setter. Now, what that means is if you're under the 20-day moving average and you break out above that 20-day moving average, odds are the trend continues higher. Vice versa. If you're above that 20-day moving average, things are going good. You break under that 20-day moving average, well, you can set a negative trend from that point forward. Even throughout some of the market weakness we have seen in the past couple of days, Tesla stock has managed to hold above this 20-day moving average and find a lot of support around it. Even as you have fallen quite a bit under this moving average, the last 3 days, you have retaken that 20-day moving average. It has not acted as resistance, it has acted as support. That tells me, based on the charts from a technician's point of view, Tesla stock may be primed for a continued breakout here. But I do want to caution you because the markets are pretty irrational right now. In fact, at the time of recording this video, the NASDAQ is soaring on bad news. We did have PPI come in a little bit lower than estimates, but that's not what caused this move higher today in the NASDAQ and in the S&P. It was actually a bad 30-year bond auction that sent the markets down initially and then sent the markets soaring, which just shows you how irrational markets are these days. Your 30-year bond auction came out at 1 p.m. Eastern Standard Time. The NASDAQ was up about 0.5%. So you've almost rallied 1% since this bad bond auction. The last percentage rate we had on this bond auction was 4.33%. The new number is 4.67%. That was a lot higher than people were expecting. And it seems like the markets just took it as, hey, we should buy the dip. When in all reality, when the markets act like this, I think you need to be kind of conservative, okay? You can see this is the candle of the auction itself, and it was actually a down move, a pretty substantial down move, in fact, and then the markets just bought it up anyways. You also have some data coming out tomorrow. You do have your Michigan Consumer Sentiment Survey numbers, and specifically their consumer confidence, as well as 1-year and 5-year inflation expectations. Those are going to be important numbers. You have some Fed speakers coming tomorrow, big bank earnings tomorrow morning, and you have this weird geopolitical tension in the Middle East. We don't know what's going to happen next. So there are some catalysts that could still cause markets to fall and cause Tesla to fall as well. I'm not trying to say Tesla's going straight to the moon here. I'm saying this is a pretty good sign if earnings are good on April 23rd and Tesla takes the approach that I'm calling for to focus more on profitability than cutting prices, sacrificing margins to grow unit volumes. Tesla's stock could go well into the 200s even if the markets are selling off. I think this is really a stock picker's market, and that's why you've seen the average stock really hasn't done well in 2024. I'll point out Tesla here falling from $265 down to $160, whereas the S&P and the NASDAQ were just hitting all-time highs. There is no reason why Tesla couldn't rally as the markets are falling. And I think on that note, Tesla's priced in a lot of bad news, so really, the markets haven't. I think the market should be down a lot, and Tesla should be up a lot from here, if I'm correct on Tesla's earnings. But with that said, let's go ahead and get into all of your Tesla stock breaking news that you need to know today. Tesla has started rolling out update V12 3.4 to employees and the first rounds of software updates to customers. The rate of improvement you are seeing with FSD is off the charts. This is leading Morgan Stanley's Adam Jonas to release a new note on Tesla stock today. He says, quote, "We believe Tesla, an auto company, may be unusually well positioned in the first 3 of the above attributes. Investors are struggling to see how the company can use its infrastructure and network to achieve a path to monetization. There are paths within transportation, 10 trillion miles traveled annually in the global auto market, but FSD take rates and taxis and robotaxis may not move the needle significantly in the near term. While August 8th may be important to the stock, positive or negatively, we are eager to hear about the next thing. He goes on to say that Tesla's fleet drives more miles in 5 minutes than Apple's now canceled autonomous fleet had reportedly driven in a year. By 2030, we estimate Tesla's global vehicle fleet will approach 40 million units in service, driving over 400 billion miles per year, over 1 billion miles per day, or nearly 13,000 miles per second. From our conversations with AI experts, such a monumental data set may be an advantage for machine learning and neural net training. As Elon Musk wrote back in 2016, and he recently reiterated, to get to level 4, level 5 autonomy in cars, you likely need about 6 billion miles driven. Tesla just crossed above 1 billion miles driven. And in the not so distant future, according to Elon Musk, you are going to be at 10 plus billion miles driven on FSD. And if Adam Jonas believes Tesla's fleet by 2030 is going to be driving 400 billion miles a year, yeah, to bet against the robotaxi network sounds crazy based on those numbers. Even if Elon Musk was wildly too conservative with the 6 billion miles figure, what about 20? What about 30? What about 40? We're going to be there long before 2030, which, putting that into perspective, shows the robotaxi network may actually come in 2025, if not early 2026. And I will tell you right now with 100% confidence, a robotaxi network is not something that is factored into Tesla's valuation today. Nobody on Wall Street really even cares about the robotaxi network until it's actually here. By then, Tesla stock is going to be way higher than it is today. That's why I believe this could be one of the last great buy the dip opportunities. You're gonna get buy the dip chances for many years. They always come. There's always another panic. There's always something that happens that will cause a stock to fall. But this is one of the great buy the dip opportunities that I think we have left. One of the last ones. Like, for an example, if Tesla does focus more on profitability, as I expect they're going to, as Tesla stock goes higher, we get the robotaxi network, Tesla stock may go to, $600 per share, $700, $800 per share. If we go through market crashes, the stock may only ever fall back to $300, $400 or so. I don't think you're going back sub 200 for a long time. Probably ever. And I think the real question is, does Tesla stock break out big time following their earnings, or does it take a little longer? Let me know what you think down below in the comment section. Polestar delivered 7,200 EVs in Q1, a 40% drop from 12,076 in Q1 of 2023. Bank of America has lowered its Tesla price target to $220 per share from $280 per share. They say, quote, "We think that Tesla will face mounting profit pressure from a weaker demand environment unless Tesla taps into new geographical markets. We see it hard for the company to generate additional sales with its current product portfolio or without cutting price further," the bank said. This had like zero effect on Tesla's stock today because you've already priced in so much bad news. What's another bank or analyst cutting their price target on Tesla? And I really think this highlights my point again. If Tesla does take the approach of focusing on profitability, getting margins higher, not necessarily cutting prices to sell more units, right? That's not going to help Tesla stock, at least in the short term. But if Tesla does start to focus more on profitability and they tell the markets that, that's going to catch everyone off guard. And that could be a huge upside catalyst for Tesla's earnings on April 23rd. I mean, let's also be honest, Tesla stock is sold off over 9% the last 4 earnings in a row. If that happens again, that's going to be the 5th earnings in a row. That's basically unheard of. I don't know of any other stock that has sold off that much every single earnings, besides maybe like Snapchat that just crashes every earnings. But I've definitely never heard of a company the size of Tesla doing that for almost a year and a half straight. I think the pure statistical probability of another big fall is pretty low. And check this out. This is hilarious. Ford is offering existing Tesla owners an additional $1,500 off the price of a new Ford F-150 Lightning. The new incentive is called Tesla Competitive Conquest Bonus Cash. That is hilarious. That's like actually comical. They're like, Tesla's taking all the business. We have to do something to try to compete. Tesla's first Model 3 and Model Y units have landed in Chile as the company's efforts to begin ramping up EV sales in South America have officially begun. And the Model Y long-range rear-wheel drive is now available in various countries in Europe. Tesla says they'll be releasing Powerwall 3 expansion units for $1,000 less in Q3 2024. It'll make installing systems with 2 or more units cheaper and easier. The expansion units don't have solar inverters and site controller electronics. All Powerwall 3 uses LFP batteries. ARK Invest made a new blog post. They say, quote, "Since late 2023, media headlines have seized on data showing that EV sales growth decelerated in 2022 and 2023, from 113% in 2021 to 59% and 28% on a year-over-year basis, respectively. Our research contextualizes this deceleration in growth and suggests that traditional automakers cutting back on EV investment are at risk of missing the transition altogether. Media pundits and many investors fail to appreciate the nuances of adoption curves involved in the process of disruptive innovation. Perhaps counterintuitively, growth rates typically decline as the market scales into a new technology, as shown below." So you can actually see the share of electric vehicles compared to internal combustion engines is growing ever larger every single year. And hybrids really aren't doing much of anything. I mean, they're growing a little bit, especially plug-in hybrids. They're really not doing anything. Electric vehicles are growing the most, but the year-over-year change does get a lot smaller as the market gets larger. I think most of you guys understand that, but in case you did not, it's literally supposed to happen this way. The pie gets bigger, the growth rates slow down. Ford has cut prices on some 2024 F-150 Lightning trucks by up to $5,500, according to a bulletin sent by Ford to dealerships. It's almost like we're noticing a trend here with the Ford F-150 Lightning, probably seeing some really bad demand as well. Tesla has reduced the 7-seat Model Y seating option by $500 to $2,000 in the US. 1 year ago, the option cost $4,000 additional dollars. The 2025 Mercedes EQS sedan is getting a bigger battery and styling tweaks. Every trim now gets a 118 kilowatt-hour battery, up 10 kilowatt-hours versus last year. The front end is now thin chrome horizontal slats across the panel, and the hood now has an upright Mercedes star ornament. And here on CNBC, Adam Jonas says, according to AI experts, Tesla has a monumental data set that may be an advantage for machine learning. They say maybe an advantage for machine learning. Like, they don't even know for sure. That's how far behind your quote-unquote Wall Street experts are in assessing Tesla. Like, I think it's a foregone conclusion when you are trading a software, business service, whatever you want to call it. It all comes down to the data. Like, that is the advantage. Which, to say maybe an advantage, yeah, I think that highlights just the overall lack of knowledge Wall Street has on FSD. And look at this. Gary Black says, on April 23rd, we expect Tesla to report Q1 adjusted EPS well above Wall Street's consensus of 55 cents per share, boosted by up to $926 million in FSD defensive revenue to be released. Adds 20 cents a share to EPS with FSD now out of beta. While investors should back out the FSD revenue released, it may not be clear until the 10Q is released the next day what's included in the Q1 revenue number. Our base is Q1 adjusted EPS is $4. Yeah, wouldn't that be great? 54 cents below consensus, which continues to fall 16% over the past month and down 33% year to date. We expect Tesla's management to guide on the Q1 earnings call to flat year-over-year full year 2024 delivery growth of about 1.8 million deliveries, which is likely already discounted by Tesla stock since the top ranked analysts have been calling for flat year-over-year growth since Tesla's Q1 P&D report. This gives management cover to bring full year 2024 volume expectations down from the current level of 1.95 million units, which would imply about 8% year-over-year growth. In the end, the year-to-date decline in full year 2024 and full year 2025 earnings estimates has to stop for Tesla's stock to move higher, but much of the bad fundamental news may already be discounted. So basically, as long as we don't get just an outright disaster earnings call and Elon and the Tesla team say, yeah, we're going to cut prices, we'll do whatever we have to sell vehicles. As long as that doesn't happen, which is really like the short-term worst case scenario, Tesla stock has likely already factored in all of the bad news, which I guess in English means you're a lot more likely to rally on Tesla's earnings than to fall. Sentiment today on stock twits for Tesla. This is mainly capturing retail investors. That's why I like to look at it. You are bullish today with a number of 57. Yesterday, you were bullish at 71. So a little bit less bullish today, even though Tesla stock's up almost 2%. That's pretty interesting. Message volume is roughly the same as it was yesterday, sitting at about 53, and the participation ratio is normal today at 54. Google Trends data for FSD is, well, at 100. I would expect it to be at 100. This is dating back to 2004, right? Long before FSD was ever a concept or ever searched about at all. And really what I'm waiting to see is where we settle out. Do we settle out at 30, at 40, at 50? Where do we settle out for full self-driving Google search data? If we settle out higher, that means the take rate is likely going higher as well. Tesla's global inventory numbers are unfortunately rising a little bit today. That either happens because demand is slowing down or production is cranking up. You can see the Model Y went from 8,700 in inventory back to about 9,100. The Model 3 is ramping up a little bit. That would be good news. You were just at 1,900. Now you're at about 2,300. The Model X sitting at about 2,500 and the Model S sitting at about 1,300. Here on the day today, option activity in Tesla from big money. These are hedge funds and institutions. You have seen 529 different trades totaling $110.3 million with a positive order value of 50%. If we take a look at the short activity today, you do have cost to borrow fees about 8.6%, indicating there's probably a lot of shorting activity taking place today. You do have short interest hitting a new high that you have not seen in over 2 years at 3.89%, with $18.48 billion currently sold short in short positions. And you do have 107.58 million shares that are currently sold short. So every $10 higher or lower is either making shorts about $1.08 billion or costing them $1.08 billion. So judging off of the move we're seeing today, about $3 higher, short sellers losing close to about $400 million today. And that will really start to hurt if Tesla has good earnings and the stock does do as I expect and go up quite a bit. Here on the day today, you actually have 10-year treasury yields that are falling about 1.5 basis points down to 4.54%, but still, this is a huge rally you've seen for 10-year treasury yields over just the last couple of days. You did have PPI that came in a little bit lower than Wall Street's expectations. PPI in the headline month over month was expected at 0.3%. It came in at 0.2%. And then core PPI month over month was expected at 0.2%, and it came in at 0.2%. So a little bit better on the headline, meeting expectations on the core. But overall, considering we've just gotten hotter than expected inflation report after inflation report after inflation report, this was seen as good news, but it's not the biggest thing that is affecting the markets today and effectively sending the NASDAQ up over 1.3%. As I said, tomorrow we are going to have some important economic data as well as big bank earnings that will be vitally important for markets. I'll explain why in the next video and my expectations, so stay tuned to the channel for that one. That will be coming out at 8 p.m. Eastern Standard Time tonight. Nonetheless, like I said, Tesla stock is holding support at the 20-day moving average. That is great. We have a lot of resistance to break out above. Around 178, there's a resistance level. Your 50-day moving average currently at $182 per share. That's going to be resistance. 188 is going to be resistance, this line here. And then probably just your round 200 level. Round numbers like 200 tend to be, either resistance or support as well. So that's also going to be another one. We have 4 resistance levels here in just the next $25 or so. So it's not going to be, easy going to the upside. But when Tesla does break out, especially above 200, then you can get into a much larger upside move. And I would not be betting against Tesla heading into Tesla's earnings on April 23rd. If you take a look at the MACD is looking pretty good, curling to the upside. Still negative about 3 on the MACD line, negative 4.24 on the signal line. So definitely some room for improvement there, but looking pretty good overall. You have the RSI at about 49, which neutral is 50. So you're even after today, still not even positive at all on relative strength. So definitely a lot of room there as well for Tesla stock to run. Tesla is currently running about 4,000 different ads with Google. And after yesterday's huge decline for your average stock, with your average stock declining under their 50-day moving average, about 12% of them on the broad markets fell under the 50-day moving average yesterday. That was insane. You are positive today about 1.5%. So even though the indexes are rallying, it's really not a broad-based rally. And a lot of the rally taking place today is concentrated in, you guessed it, your big tech names. And at the time of recording this video, to end things off, Tesla stock is up almost 2% on the day today. Let me know what you think about this information down below in the comment section. Are you buying the dip? Are you holding? Are you waiting for lower prices? Are you going all in? Let me know what you are doing in regards to Tesla down below in the comment section. Hit the like button, subscribe to the channel, all of that good stuff. I did make a trade on Citi earnings tomorrow. If you guys want to see that trade, check it out. Link down below in the description of this video to come join the trading community. You guys have a fantastic rest of your day, and I will see you in the next one.